If gold gets up to 2090 and we don't get there until like week 15, and then we break out, you're going to catch a bunch of gold bugs buying that breakout too late in that intermediate cycle, and then it's going to pull back again. When gold finally breaks out above the 2090 level, silver's probably it's going to be testing that $30 resistance and maybe breaking out above that $30 resistance. And once it does, then it's kind of got, a fairly clear shot up to 50.
Gold and silver prices were modestly down in quieter early U.S. trading on Monday, hitting 6-week lows overnight. Gold and silver bulls remain cautious as U.S. Treasury bond yields have risen, and the U.S. dollar has been appreciating on the foreign exchange markets. Despite the current lows in gold price, Gary Savage, a precious metals analyst, predicts that if gold reaches the 2090 level, ideally around week 10 of the intermediate cycle, there is potential for a sustained breakout. Regarding silver, the renowned analyst believes that once silver breaks out above the $30 resistance level, it could have a clear path to $50, with sustained moves more likely if the breakout occurs earlier in the intermediate cycle. The price of gold is declining toward the crucial support of $1,900 amid sheer strength in the U.S. dollar. This is even though the Federal Reserve is expected to keep interest rates unchanged in September. Looking at the weekly chart, Savage highlights the intermediate cycle low around the end of June and speculates the potential for a lower low. However, he emphasizes a hopeful scenario where gold recovers, maintains above a 10-week moving average, and tests all-time highs within the next few weeks. This would increase the likelihood of a successful breakout and sustained upward movement. Regarding the possibility of the current gold cycle turning down, Savage points to historical cycle lows, including an 8-year cycle low in 2015. He suggests that the current period could begin a bubble phase for gold. He compares this to the late 1970s, when gold took time to break above $250, but saw a rapid surge to $850. This indicates that a similar rapid increase could occur during this cycle, leading to a bubble phase in the gold market. This phase could unfold over 2 to 6 years within this 8-year cycle. We will now bring you clips from Gary Savage's interview with Palisades Gold Radio. But before we do, if you want more videos like this, ensure you smash the subscribe button and turn on the notifications bell for more videos. Thank you, and enjoy the video.
Breakouts tend to be sustained when they occur early in a cycle. So in this case, we're looking at the intermediate cycle. So if you want to see a sustained move, then you want a price to break out above some resistance zone early in that intermediate cycle. Then it has plenty of weeks left to continue to rally and get a sustained move before you get an intermediate top and a correction. Breakouts that occur late in an intermediate cycle generally don't produce sustained moves, and this is how traders get caught at tops. For example, I think gold's on either week 5 or 6. If gold gets up to 2090 and we don't get there until like week 15, and then we break out, you're going to catch a bunch of gold bugs buying that breakout too late in that intermediate cycle, and then it's going to pull back again. We really want the breakout to occur by, let's say, week 10. If we get that, then we'll get a sustained move, and then maybe the correction will be to come back down and retest the breakout, but not drop. There's a chance maybe that gold has completed this daily cycle low. I was pretty convinced that we got an intermediate cycle low about a month ago, and it's just right now gold is dropping into a smaller degree daily cycle low. I expect that daily cycle low to hold above that intermediate bottom. So if we can get some good upward momentum here in the next 2 or 3 weeks and retest that 2090, then I think we have a good chance of breaking out and making a run to 2,300 before we get our next intermediate correction that might have to come back down and test that 21 again. This is the weekly chart. This would be our intermediate cycle low here right at the end of June. So we're, let's see, 1, 2, 3, 4, 5, 6. We're 6 weeks into this intermediate cycle, I think. It is possible that this could turn back down and we get a lower low, and then that would kind of reset the cycle count back to 1. but I don't think so. I think this is going to probably hold. And looks like the market just opened. um, but we're on week 6, so we want to see, it'd be really good if gold can recover by the end of the week and then hold above this 10-week moving average here. And then over the next 3 or 4 weeks, we get back up and test these all-time highs one more time. And that would put us there early enough to where I think we could get a breakout and in a sustained move. But if we, futz around here and, it's like 15 weeks before we get up here and test this again, then I don't think we're going to get a sustained breakout. So here was our previous 8-year cycle low here at the very end of 2015. And then the March low, which was a 4-year cycle low for stocks and also a 3-year cycle low for the CRB, was not a major 8-year cycle low for gold. That came right here. I am about 99% convinced that this is the 8-year cycle low in gold. Yeah, I think we'll get the bubble phase in gold during this 8-year cycle. It could come quick back in the late 70s, when it took gold quite a amount of work to break out above that 250 level. But once it did, within like, it was an eight months or a year, something like that, it went from 250 to 850. So the bubble occurred really quickly after the breakout. Something similar could happen here if we get once we get this breakout. It could be 2 years and we get our bubble phase and then it's done. And at that point, you got to look somewhere else. Or it could be 6 years into this 8-year cycle. But I do think we're going to get the bubble phase of this gold bull market during this 8-year cycle.
Silver kicks off the new week on a softer note and touches a fresh low since July 7th during the Asian session, though it lacks follow-through selling. The white metal now seems to have entered a bearish consolidation phase and is oscillating in a narrow trading band just above mid-22s dollar. Savage believes that silver is currently undervalued and a great buy. Many analysts anticipate an increase in silver's price in the 2 to 5 year horizon. While specific targets are hard to predict, projections range from $50 to $100 over 5 years. The consensus is that silver holds promise. Regarding the banking and stock market sectors, Savage emphasizes that although banking stocks have shown some improvement, they still face challenges, with the potential for further decline as the stock market undergoes an intermediate decline. This situation might lead the Federal Reserve to inject more liquidity into the market to mitigate the impact. If the banks suffer more significant losses and the Fed responds by printing more money, this could exacerbate inflation, leading to a problematic inflationary phase. Savage predicts that such a scenario could trigger a recession if inflation becomes unmanageable and destabilizes the economy. Let's get back to the interview.
When we get the final bubble phase in the metals, I'm on record as saying that $100 silver is going to be a piece of cake. Now, a piece of cake doesn't mean it's going to go there in a straight line. There could be, lots of back and forth and lots of gut-wrenching corrections along the way, but it's going to get there. Mm-hmm. And if we just use some basic ratios, if the average or let's just say if we just go to 30 to 1 on the gold silver ratio, which is what we did back in, I think it was 2011 at that top, a 30 to 1 ratio, if gold goes to 5,000, which is not much of a move really, considering how long we've been in this basing phase, that would put silver at about $150. If gold goes to $7,000, which is still a pretty modest move considering how big this base is, that would put silver at about 230. And if gold goes to 10,000, a 30 to 1 ratio on silver to gold would be at about $330. So, that's probably on the maybe a bit far-fetched. I don't know that it's going to go that high, but I guarantee gold or silver is going to hit $100. And I think between 100 and 200, 250 is probably likely, in my opinion. So silver is probably the most undervalued commodity on the planet right now, and you're getting a chance to buy it really cheap. Banking stocks, like I said, they've rallied a bit, but they're not out of the hot water yet. They're still too close to those all-time or those recent lows, the May lows. And when the stock market rolls over and gives us an intermediate decline, which it may have already started, it's going to drag those banks down too. And I think there's probably a pretty good chance that the banks can make lower lows. I think that's going to cause the Fed to panic again, and they'll print more liquidity. And the problem they've got now is that not only did a lot of that liquidity go into the tech sector, but recently it started to go back into the commodity sector. And I'm pretty confident that the CRB has completed its 3-year cycle low in June. And now we're starting to see in energy. So oil in particular has really started to go a lot higher. So I think that liquidity that was intended for the banks leaked into the tech sector and the general stock market is now starting to leak into the commodity sector, especially energy. And we're probably starting the second phase of the inflation cycle. So the first phase ended, of course, when Russia invaded Ukraine, and then we had a pause, which is completely normal. You'll get some kind of a pullback between the first and second phase, but I think liquidity is starting to go back into the commodity sector and the energy sector, and if we do get a hard move down in stocks and the banks take a beating, the Fed's going to be forced to print even more. And they've already got a problem because that liquidity is already starting to go into commodities, so it'll just probably go. They'll probably create another really bad inflationary phase, and that generally is what causes a recession. Is when inflation gets out of control, then it collapses the economy, and you have a recession.
Despite recent declines in gold and silver prices, there is potential for a significant turnaround. If certain critical levels like $2,090 for gold and $30 for silver are reached, there's a chance for sustained breakouts and upward movements. Are gold and silver prices poised for a significant turnaround shortly? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.